The month of January certainly had its high and lows. In this week's weekend review, I'm going to walk you through a personal recap of how my trading went. I'm going to give you a look at a potential setup on a higher time frame trade, and I'm going to answer a Twitter question asking me to address and update you guys on a prediction I made a month ago on Apple. I'll give you a clue. I was right. So all that and more, grab a chart, grab a pen, grab a paper, and get ready for this week's weekend review. As I mentioned earlier, January was an up and down type of month. On one hand, my swing trading was excellent, returned about 23%, far surpassed the goal I had last week, or the goal I mentioned last week of trying to get 1,000+ pips, and really just a very high percentage month for me, more than what I'm used to. On the other hand, my day trading was down a lot. We had about a 7% drawdown in the live room, which is probably ties us. There's a little less than what our biggest drawdown is since the live room started. Now, I haven't done a full analysis of the month. At the end of every month, I go back and just make sure, hey, did I make any mistakes? What was going on? Was there a reason for this type of drawdown, or was it just the markets? And but what I can think of off the top of my head is on the higher time frames, we saw a lot of rallies. I can't remember a lot of painful trades we were in, meaning trades that went up, went down, kind of made you antsy. Most of the higher time frame trades went straight to targets and were really, really pain-free. Those type of rallies on the lower time frames also mean a lot of busted patterns. So there could be a significance in there. Again, just off the top of my head, thinking of something. Haven't really looked at the charts and analyzed it yet. But again, good month on the higher time frames, not so good on the lower time frames, so ends up balancing out, I guess you can say. Now, speaking of the higher time frames, I want to show you a trade on Euro Aussie. This is one that I've been talking about with my syndicate members probably for the entire month of January. We've been looking to play it up, then looking to play it back down, and well, I'll show you guys what my thoughts are now that we've broken the recent double bottom that we just put in. Let's take a look at Euro Aussie. We're going to start on the daily chart. Now, this is a pair that we've been breaking down the syndicate for the last couple months and really feel like we're in the market's OODA loop. But I want to let you guys know about a potential trade that is really on the verge. Now, if you look on the daily chart here and we just do some basic analysis, just some basic structure and price action analysis, you'll see that we're in an uptrend, right? We have our most recent swing low to swing high. We can even go up here, boom. We have our outside return. We have our new structure high right here. So what will we expect next? Yep, an outside return. As soon as we get this new structure high, we know that we're in a bullish trend. We're in bullish rotation. We'd expect an outside return to come down to our previous level of structure. And we look for a chance, at least trend continuation traders would look for a chance to hop on this trend and, hopefully play it towards the next extension. So the question now is, if this market's in an outside return, which we are, where is it likely to stop? And the first level I see is right here. If we take a look at these two candles right here and I draw a line and look at what we see. We see structure right here. This is a kind of a mini outside return, a little wave inside of it. Actually an ABCD pattern, as you'll see a little later. But structure right here. Keep looking left. Structure leaves clues. Structure right here in the middle. So after the market broke through, it came down, tested that level again, was rejected, broke down, came up, retested that level again before extending. Not only that, we look left once again, structure again. And if we zoom the chart all the way back out to about 2 years ago, what do we have right here? Boom, that same structure level. So the price action in the chart is telling me that this is a market that has been, or this is a price level, I should say, that has been respected in the past. If it's been respected in the past, well, it should be no surprise if it's respected in the future. Now, that being said, that's not all I need. That's just what I use to make my initial analysis of the market, to gain my initial bias, my initial prediction. If we're going through the IPDE, we're looking identify, predict, decide, execute. This is when I go down to my lower time frame. So I'm gonna go down from my daily chart. I'm gonna find my 4-hour. Here we go. Gonna find my 4-hour chart. Let's go Euro Aussie on the 4-hour. And now I want to ask myself, okay, well, I've identified what the market's doing. I've predicted where the market's likely to go. We have that 53 even handle, which was right here, I believe it was. Let me just check my red line. Yep, 53 even. Is there a way I can involve myself in a trade at this level? And I'm actually going to pause the tape. I'm not going to pause the tape. I'm going to be quiet for about 10 seconds, and I'm going to give you the chance to kind of guess if you can see what I'm looking at here. Take some time. All right, you guys got it? If not, if you're still working on it, pause the tape before I spoil it for you. But what I'm looking at this level is a potential advanced pattern completion. We're looking at what would be a bat pattern. Looking at an X to A, our initial impulse leg, X to A to B in here, B to C, and we're going to have a D completion that lines up right on that 153 even handle. So do the math. Again, higher time frame. We identify what the overall market is doing. We make a prediction on where price action is likely to go next. We go down to a lower time frame, get a zoomed in view of the market. What do we see? We see an advanced pattern completion. Now, there's two ways you can look at this. If you're strictly a 4-hour trader, if you're strictly maybe an advanced pattern trader, you're not worried about trend continuation, you're not worried about structure, you're saying, guess what? I'm going to trade this bat pattern. I'm going to draw my fib on from the A leg to the D leg. I'm going to pick out my my Fibonacci ratios, my target levels. I'm going to look to get target 1 hit. I'm going to look to get target 2 hit. For the higher time frame traders, you're looking at the overall view saying, man, trend continuation. I need a chance to get long here. Where can I get long? Boom. Now you have an advanced pattern completion, or a potential advanced pattern completion that could be your reason, your excuse. Maybe not excuse is a bad word, but your entry reason to get into a trade. And you can use that as your entry for the higher time frame trading setup. And then, of course, there's a hybrid way you can do both. We mention this, I feel like, every week in the syndicate, but you can take target 1 off, bank some profit, get stops to break even, and let target 2 ride to the next prediction level. There's tons of ways to handle this opportunity, but I want to take the time to show you how we go about looking at charts on a regular basis. Taking that higher time frame, going down, really analyzing it. And in the case of Euro Aussie, again, we've been breaking this down in the syndicate and in the live room from the beginning of the month. We originally looked at it right here where we had another ABCD pattern. Syndicate members, you can just go back and look at the past videos. We looked at it right here for another ABCD pattern. We made the prediction that's going to come back into this structure level and extend up. What do? We came back into the structure level and extended up. Now we're making our next prediction. We actually made a prediction to buy a double bottom right here. I didn't get what I needed, so I didn't buy. And now we're making our next prediction on where to get long at. So this is one of the benefits of chopping down my portfolio. If you've been with me for a while, last year I watched about 17 to 20 pairs on a regular basis on the higher time frames. This year I'm only down to 10. So it's a lot less pairs, but I'm seeing more and more opportunity because I'm really getting in the market's OODA loop. I'm really able to see and understand and feel, call me crazy if you want, really able to feel what the market is doing. And that's giving me an even bigger edge over the market. So that's something I want to bring up. I don't usually do predictions and show you guys charts and analysis in the weekend review video. I leave that for Jason in the Forex market preview, but I thought this was such a good opportunity that I had to share it with you. And maybe I'll get a bunch of comments that say, hey, Keel, do this more often, and maybe it'll be a regular thing. Who knows? We'll see. But I want to take time and show you this Euro Aussie. Don't worry so much about the actual trade. Think more of the mindset and the process of how we break down the markets and allow ourselves to take advantage of these opportunities day in and day out. If you've been paying any attention to the stock market, you'll know that Apple had an earnings release this week. didn't end up too good for him. And because of that, I got a tweet asking me if I can update, in this week's video, update you guys on the Apple prediction I made about a month ago. Now, if you haven't seen it already, go back and watch that video. At the time, I was saying, hey, this is why you should short Apple. And if you're looking to buy, I'd really wait till it reaches these levels. So I want to update you guys on that. Nothing has really changed in my analysis, but I got the request, so I'm going to honor it. But before I get into that, I want to talk a little bit about the day trading and going back to the rough month that it was. I got a phone call the other day from my good friend, Devin Rember. He runs a motivational blog called goodvibesblog.com. And he was picking my mind on a topic, a blog topic. He was writing a post called "The Grass is Greener." And he was thinking about this quote. I'm sure you guys have heard it before. The grass is greener. The grass is always greener on the other side. And really, he said, this is not true. You know, what that really meant to him and how he broke it down. And of course, you can read the whole, I'll give you the link to read the whole thing if you want. But how he broke it down was that what that quote really meant to him was saying that when times get hard, you should give up on what you're doing and try something else because you have a better opportunity of succeeding doing that something else. And we both agreed that, you know, that is the complete wrong, opposite mindset that you need to have. And, you know, trading is a good example of that. You know, so many times when traders go into drawdowns and, you know, even an example like in a live room this week where I missed out on 5 winning trades because of the advanced target taking technique that I use with my day trading. Let's use that for an example. Say you have a trader that follows me, say, hey, Akil does this advanced target technique or aggressive target technique, whatever you want to call it, so I'm going to do it too. So you get 1 trade, 2 trade, 3 trade, 5 trades in a row that would have hit your traditional target ones, but because you're doing this advanced technique or this aggressive technique, all you did was get stopped out for break even. Eventually, especially if you're not a seasoned vet, that can wear on you. You're starting to see money in your pocket, or what you think is money in your pocket, leave without you getting any. Money in other traders' pockets, leaving without you getting any. And before you know it, you're saying, you know what, this technique is stupid. Why did I decide to do this strategy? Let me try something else. Same thing with whether you're a pattern trader or a mechanical trader. People have when you start trading a system and it goes through a drawdown, all systems go through drawdowns. But the absolute worst thing you can do is give up on that strategy or give up on that system and try something else because, well, you think it's going to be better than what you're doing now. What you really have to do is tough it out. You've got to fight through it. You really have to have that belief system that what you're doing is right, and you have to make it work. Because what happens if you try to bail, guess what? You're going to bail to something else. When that something else goes to the same type of drawdown, because all of these systems do, all of these strategies do. When you find that something else that goes to the same type of drawdown, guess what you're going to do? You're going to lose some money, you're going to bail again, and you're never going to give yourself the chance to be consistently profitable. How do I know this? Because I've done it plenty of times. Trust me, most of the mistakes I teach my traders or my clients have been made by myself personally. That's how I know it so well. So wanted to sneak that in real quick. Now let's shoot over to an Apple chart and I'll give you guys an update on what I think is going on. Earlier in the week, Apple's had an earnings report and, well, let's just say it was a stinker for lack of a better term. Now, during the week, I got a tweet from a trader friend of mine asking me what my view on Apple was now. And if you guys don't remember, I did a video, I think it was the end of December or really early January. It was called Why I Wouldn't Buy Apple or Why I Didn't Buy Apple, something like that. Anyway, at the time of the video, I think Apple was trading at about 565s, 570s and discussed why I wouldn't be looking to buy at this area. Rather, I'd be looking to sell and then pointed out a few areas that I would be looking to buy at. Well, a month later, let's take another look at it and again answer this trader's question. And really, none of my analysis has changed. Everything that I did on the first video was based off technical analysis, not on earning reports or how the markets are doing otherwise. Based off technical analysis. And this is what I originally saw. I originally saw an ABCD pattern. We saw swing low, A to B. If I can clone that, try it again. If I can clone that, AB, we had an ABCD pattern right at structure. We ended up double topping on, I think, the daily or the 4-hour chart and then falling off a cliff. Now, the two levels that I predicted it to go to, let me just grab my notes to make sure I remember what I said. I write everything down because I have a horrible memory. Yeah, I was looking for Apple to go down to, the first level was 525 that I mentioned, and the second level was 455. And you can see we've blown through the 525 level. We kind of got stuck at about, I think it was 530s, 530s for a little bit, and we've blown through that 525 level. So my next prediction again is that second level. I really think we're going to see a test of this 460, 465 area. Why? Because, well, you see my red line right here. Not only is that a test of our C leg, but look left, structure leaves clue, similar to Euro Aussie. We're also at the peak, the highest point of our previous double bottom pattern as well. And you want to add one more thing to that. Let's bring in a Fibonacci retracement, go from our swing low to our swing high. And you're going to see we have, boom, a 618 retracement hiding right in that level. So to update you on my prediction is really just, it stays the same. I still think Apple is going to fall to that level. So if I were a trader that was looking to buy, I would wait till Apple came down to 460s. I'd measure out my potential risk versus reward. I can have a very, very small risk looking at 460s, getting stops right under this structure level right here, and reward, well, all depends on what type of investor you are, or all depends on if you're a trader or an investor. If you're an investor, obviously you're holding this for a bigger projection. If you're a trader, I'd look at the technicals to see where I want to take my next profit off. So trading mindset, I'm probably looking right here, another retest of 570. If I'm an investor, I'm holding on to it for quite a bit longer, probably back up to this 700 level. So there's an update on that video. Again, nothing new, but I did get the Twitter question. I do follow what you guys say, and every time I get a chance that I can answer something in a video, I try to take the chance to. It always helps when I'm right on a prediction too. It makes me look good. So there goes Apple for you. So I really hope you guys enjoyed this week's Week in Review. Two things before I leave, just some words of advice. If you had a tough month, this is the perfect time to get it out of your mind, retool this weekend, scroll through some charts, start bringing that mind back up to speed, and get ready to fight again in February. If you had a good month, well, guess what? You've got to shake it off. You've got to forget about all that profit. You got to do the same thing. I had a great tweet, or I read a great tweet from a trading friend of mine, said, well, just closed January's books. 57.14 win percentage, 323 pips gained, and a 5.8% return on investment. Very happy. Ring went up for the bird, which is kind of an inside joke we have going on. More importantly, after that, after getting some praise from some other followers, he said, thanks. I'll celebrate briefly this weekend, but back to the grind and hard work on Monday. And that's the mindset you got to have. Guess what? Minus 7% on the day trading side of things. Am I going to let that affect me and get me depressed and mad for next month? No. 23% on my swing trading. Am I going to get overconfident, excited, thinking I can't lose, I'm Superman in the markets come next month? No. Everything is at zero. Everything's blank. I need to start over and start the hard work and start the process from scratch like nothing happened next month. And if you consistently have that mindset, if you consistently have that short memory like a baseball player or like an NFL quarterback, you're going to be on the right track. So take care, guys. Have a great weekend, and I will see you next week in the live room, in the syndicate, and, of course, in the weekend review. Take care.